Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 7th. Wednesday. It's Wednesday, right? Yeah, I'm losing track of the days here, guys. Let's go to the charts because, it's market's being kind of interesting. I mean, it's going sideways. That's interesting to me because all it ever does is go up these days. You know what I'm saying? So here we're going sideways. Yesterday, they tried to pull out a little bit of a rally and they did make new highs, but it didn't last very long. And towards the end of the day, there was some selling. And here overnight, kind of drifting sideways. And in the treasuries moved up yesterday, so that's good. But kind of makes you wonder, the treasuries going on the upside. Normally that's pretty good for equities, right? But it didn't really do anything, so that's kind of interesting. And then we come over into the commodities. Oil still kind of struggling as there's pressures both on the supply and demand side. OPEC and there's, I guess, the Iran negotiations are kind of factoring into this a little bit now too. Gold and silver, well, overnight gold took a little bit of a hit, and I believe this is probably mostly due to action in the Forex market, as I'll show you in a second. Copper continues to struggle a little bit because of China, so because China is kind of backing off on the fiscal stimulus. And then you get the dollar. So yesterday, a little bit of a dip. This was in the later end of the session. It went a little bit lower here, but you can see it come pushing down. And when we get into some of the other ones here, yesterday Japanese yen really strong, another little spike up overnight. So it seems like that some other currencies, particularly the Japanese yen, are gaining some strength against the dollar, making the dollar weaker. Interest rates rising, causing gold and silver to go down, frustratingly so. Because here again, it's like, but we're going to get excessive inflation. I mean, come over here. So I'm trying to change my workspace up a little bit. I really want to check other instruments more frequently and get a better idea of what the overall market is doing. So I got this. It's not enough. It really is not enough. I think that I can read all this and I can see like the net change, but I think I need to see like a much shorter term change. Like how much has it changed in the last minute or something like that? And I don't know. I don't know really how to do it. I mean, here I got the charts, so maybe that helps a little bit. I don't know. TNS trend is interesting, but I don't know if that's really worth anything. I'm looking. So I went in. I wanted to try and make a better market analyzer. I wanted to make a column so that you could set a reference point, kind of like we do with our DOMs here. But the way that they have the market analyzer set up kind of prevents you from doing that. So now I'm like, do I need to build my own market analyzer into NinjaTrader? Or maybe we can get the Jigsaw guys to make a really nice watchboard. That would be cool, right? But I haven't heard much activity from Peter lately. I don't know what they're doing development side. So I actually sent an email a while ago and haven't gotten a response yet. So I don't know what they're doing. Anyways, we do have some news coming up here today. So we've got Canadian imports, and U.S. imports, exports, balance of trade numbers. We got Fed's Evans speaking at the top of the hour. Nothing too significant today, though. Uzi says, "Lol, getting the Jigsaw guys to ever do it." Oh, I like that. It's really stop and go. This is the thing. Okay, here's the numbers coming in, and I really see the market reacting to this much. The time and sales coloring thing is just a gimmick. I mean, it is showing you something. It's showing you whether there's buy or sells going into the market, but there's so much noise. I don't really see how you could really find this all that useful, huh? I don't know. So yeah, when I think about the Jigsaw thing, like my understanding is like Peter started this, and I think he did a little bit of it out on his own, and then he started, contracting things out and stuff. And then later in the year, he hired a couple of guys, right? But they got in on the charts and they started doing some stuff. And I think they were getting into some complicated things because he was talking about like a different database structure underneath of them and stuff so that they could handle all of the order flow stuff on the charts. So it was like they were going to release another improvement in January, and like it never happened. And they said, oh, well, we didn't want to release a bad release, and some of this stuff ended up being more complicated than we thought. So now I'm sitting here thinking like, okay, so how bad did it end up being? Or did something happen with the guys that were working on it? I don't know. So I don't know anything that you don't, unfortunately. I wish I did. Wish I was inside, but it's frustrating because it used to be, I felt that Jigsaw was quite responsive and was always adding cool new things in pushing the boundary. And now, like and it was like they got into the charts and like development slowed so much. But then I think on my side, okay, if I want to get into MBO data and I make a platform for that, how would I be doing that? Because it's really hard to support a platform like that all by yourself. And, Jigsaw just writing those live trading license fees. Well, you got to think about it. Like, how, if you want to have a real development on the software, right? You're going to have several people, right? This is not like a one person thing. This is like I think I would want at least 6 people, if not more than that, and you're talking about people that are going to expect $100K a year, right? So you need something that's pulling in $600K a year, right? $600K divided by $50 a month. You need 12,000 subscribers to sustain that, right? Plus what you get from when people buy it, right? It's hard. I wouldn't, it is what it is, but we should keep in mind why it is what it is and have realistic expectations, because you're going to have problems of some sort on every platform because of that sort of a thing, right? Because what we do is so niche, and that's why it really is like you get what you pay for. People talk about, they don't want to pay the $50 live trading fee, but it's like, you know what? Almost everything now is moving to some sort of a monthly fee model. You notice that? So it's like even Sierra Charts has been getting more and more expensive. So in fact, Sierra Charts is almost with the data and everything is almost the $50 too. And then the data fees are getting so expensive now too. It's like $100 a month. Oh my gosh, it's ridiculous. I mean, I don't necessarily fault them for it. I'd actually rather be in the boat I am now with Jigsaw than constantly chasing new features into blown accounts. I totally agree with you. Like, The Jigsaw DOM is so solid. It is really a truly solid feature-wise thing. I guess the thing, but the thing I'm thinking now though is like I'm looking at the market analyzer. All of a sudden, when I'm trying to, because there's a certain trade that I want to do. There's a certain trade that I want to do, and I've kind of got to change my workspace up a little bit to be able to do it. And part of being able to do this is going to be watching a lot of instruments at the same time, right? So when I first did it, I thought, well, the best way to do this is the DOM, right? The best way to do this would just like, you can tell if something is moved with the DOM. So let me show you what I've been dealing with. This one is funny, Uzi. Watch this one. So I'm like, okay, wait, let's do, I want NQ. I want NQ, okay? So that's the first one is I want to be able to see the other indexes to see what they are relative to each other, because we're looking for opportunities where an instrument might be mispriced, right? Okay, so here is NQ. Obviously, default DOM, huge, all of these columns. So we get rid of all of the columns. All the columns gone. Okay, so first thing I noticed right away is that I cannot get rid of the actual bid and ask columns. There's no check mark for those ones. Right? If I could just get it to be just the price, that would maybe help, because I want to have like 12 of these all next to each other. You know what I mean? You know what I mean? It would be nice if I could like aggregate ticks too. Aggregating ticks, I tell you what, I almost every day I'm thinking about that one. I really want them to add the ability to aggregate ticks. Anyways, so then I'm like, okay, well, maybe I can just make them super tiny. So that's as small as the column will let you make it. So you can make it fairly small, I guess. But then if you want to make the actual DOM thing smaller, like look at this. See, that's as far over as it will go. That's as far over as it will go. You need bid and ask for order placement. I don't want to place orders in this instrument. I just want to know where this instrument is relative to all of the other instruments. Also, when I move it all the way over, it prioritizes this, and I want this. I want that little center thing, right? Because what I want to be able to do is to say, put it next to it and say, okay, you know, we get it like this. Oops. Now it disappeared. I want to put it next to it like this and say, okay, what are we doing? Okay, the NASDAQ ticked up. NASDAQ slightly strong compared to the E-mini. Okay, maybe the E-mini should be strong. I'll buy the E-mini. I'll buy the E-mini here and take a little one. You get what I mean? That's kind of what I'm thinking about doing. Because I'm getting into the core co-integration. So because we looked at the co-integration indicator, and I'm kind of thinking, okay, so if I can come in here, I know what the co-integration of all these instruments are and how to use that and everything. And then, you know, I can use the DOM to keep track of when there is a mispricing and check the correlation, co-integration, and then try and arbitrage it out. That's what I'm thinking. Anyways, so you can't do it. You can't really do it with the DOM. But I think that would be the best way to do it, because seeing the price move up and down, I think would be best. I think what I would rather see is just like only the price column and the bid and asks, you know, colored blue and red, and none of these other columns. That's kind of what I want, right? Okay, I think that would be the optimal solution. And then you have just a bunch of them down in here, right? Every commodity all sitting down here, all pretty. Okay, that obviously doesn't work. So then the next thing is you say, okay, we should use the market analyzer. And I bet you that if you were trading that sort of a thing at a firm, that's probably what you would be using, right? That's probably what you would be using is A market analyzer. Okay, so that's cool. I can put all of these down. I can see the last price and I can see the net change on the day. So, and the net change is colored and everything. So I can read it. Okay, crude oil is up 0.95%. And I can kind of remember those and see where it was. But did it just, if I'm trying to take advantage of a teeny tiny mispricing? You know what I mean? Then how do you do that? Because you're not going to notice that it changed. You're not going to notice that it changed. You can see over here in the chart, but, we're talking about, a few ticks, potentially. So that's not enough either. So then there's this TNS trend thing that could potentially tell you if something's been buying or selling, but doesn't really tell you what the price change was. And when you look at the buying and selling, it's just kind of noise, right? So then I said, well, what I would really like then is to be able to do what I wanted to do with the DOMs, which is at a certain point, set a reference price and then say how many ticks away from it is the price now from that reference price, right? Which means that I would need to add a button into the market analyzer. And I dove into it. I could not find the controls necessary for you to be able to add your own button into the market analyzer. It's not there. And so I went on the NinjaTrader forums and I asked, and they basically just said, oh, it's not supported. There's a feature request, apparently. So you can't do that. So now I'm thinking, maybe I need to make my own market analyzer. That's honestly what I'm thinking now. I could probably do it my own control and use all of their same stuff with the columns and everything and just like rebuild the market analyzer just so that I can stick a button on it. I don't know. That seems like a lot of work. I don't think I would actually do that, but what else are you going to do? If that's what you really want, if you really want a better market analyzer. But then I kind of got into it. I was like, well, seems like there could be a lot of room to improve the market analyzer, couldn't there? But I'm not quite sure what we want to do. But like, I'm just sitting here thinking about it like, okay, what if you wanted to make it so that you traded just from the market analyzer? What would you add and that sort of a thing? But we could come in here and we could just add like moving average or something to see if they've moved up or down recently, right? Or just like something that would tell you the net change from the last X bars or something. I don't know. So that's kind of what's going on over there. Now, as I was doing all that, because I did start work on some of those other components, I just made sure that I got like the DLLs all set up. So I'm making a volume meter. It doesn't show anything yet. And when I did that, it killed all my strategies. I don't know what I did, but it got rid of all the strategies. So we need to go in and add those back onto this chart here. Strategies. So I'm going to add J2 twice. And the reward factor is going to be 1. And the stop is going to be 8. 8. And this one is going to be min. And this one is going to be max. Actually, no. No, this one is going to be max. And this one is going to be max invert. To make sure that max is truly effective. And then HFT count on both of these. And what else do we need to do here? I think that is it. And $100 loss limit on it. Okay. Okay. And then we will also add in Gabby. Yeah. shouldn't need to load multiple days. Should be able to just do 1 day. Sim Pro. This she's been doing pretty good. Okay. And I don't remember the settings for Brandon, so I won't turn him on for now. He hasn't been performing as well as he should in this environment, though. So, all right. So we got the robots going. I'm gonna come in here. And I'm going to remove the TNS change trend and the chart bit. And I don't know, like maybe I should add like a VWAP thing to it or something, but I don't think that it could handle that. Could just add an indicator, but I think that for now, I'm just going to make it small. Something like that. Actually, you know what? I'm going to get rid of that description column too, because it's just visually cluttered. There we go. Nice and small. By the way, good morning, Keller. So Feds Evans is talking already? I thought he wasn't supposed to talk until the top of the hour. Feds Evans, there are already certain obstacles to overcome before achieving the objectives. Okay, well.
Winston's mom says good morning, speculators. Good morning, traders.
Fernando Santos says, were there any news? Big drop 30 minutes ago.
You talking about like in the equity indexes? You know, I don't think that was necessarily news driven. I wouldn't really call it a huge drop either. The S&P definitely looks bearish at the moment, doesn't it? It's been a long time since we've come in and we've seen it like this, actually. And look at the market here, right? Oil is up, corn is up, soybeans are up. The euro is slightly up. All the indexes are down. Gold is down, copper is down, Bitcoin is down. Bitcoin has been getting hammered as of late, hasn't it? Now, they touched that 60K. Now, I think they might, well, I don't know if they can really get past 5,500, but we'll see. We'll see. Maybe they get past 5,500, they test the bottom side of this. If they test the bottom side of this channel in Bitcoin and they broke through, there are, like, again, there's so much leverage in this thing that you could just, it could just all fall apart so quickly, and I would just be so happy. But I don't know if it's actually going to happen. I'm not sure. I think that they would just print more Tether again, you know? Good morning, Brad. I guess the treasuries are seeing a decent drop here. And what do I have my E-mini power meter set to? 30 seconds? Cool. It's probably not actually enough. I guess I could do this. I should probably make it the same as this one though, huh? Yeah, there we go. $30. I guess I could add this longer term one. 300. 5 minutes, sure. Let's see what's Win saying. I have never sounded so sexy or so very German Cold War spy, and where is Boris? He always hits the like button. Will you gentlemen indulge me?
Winston's mom says I have never sounded so sexy, or so very German Cold War spy, and where is Boris? He always hits the like button. Will you gentlemen indulge me and hit the like button? Dankeschön. Oh, Spasibo.
Okay, market watch.
Winston's mom says market, we're seeing widespread frothiness, bubbles, risk-taking and leverage. Loads of players have taken too much leverage and too much risk, and some of them are going to blow up. Nouriel Rubini.
Yeah. So this kind of behavior is not what you expect to see at a market top, is it? I mean, we certainly see widespread speculation and rampant risk taking at market tops. But what I'm not used to seeing at market tops is the excessive volatility from those bets kind of not working out, you know? Did it just call it? What? Read it again.
Winston's mom says, did my alter ego sexy bot voice just call market watch a market winner? Winston's mom says market, we're seeing widespread frothiness, bubbles,
Judge said market.
risk-taking and leverage. Loads of players have taken too much leverage and too much risk, and some of them are going to blow up. Nouriel Rubini.
Okay, here's a story from Zero Hedge that is pertinent to my interests, authored by Michael Mahari via shiftgold.com. So obviously a gold bug, so probably is going to be full of crap. Prices are going up. The Federal Reserve is printing money at an unprecedented rate. The U.S. government continues to borrow and spend at a torrid pace. As Peter Schiff put it in a recent podcast, we're adrift in a sea of inflation. Gold is supposed to be an inflation hedge. So why isn't it the price of gold climbing right now? In a nutshell, rising bond yields have created significant headwinds for gold, and the mainstream is reading rising yields and their relationship to gold all wrong. I 100% agree.
Winston's mom says, according to research from Deutsche Bank, growth, as measured by the Institute for Supply Management's Manufacturing Index. Winston's mom says typically peaks 10 to 11 months after a recession ends. Winston's mom says rolling gains of the S&P 500 SPX minus 0,10% in the level of the ESM Manufacturing Index. Winston's mom says that would be right now, if you go by the NBER's definition of recession, and note its stubborn refusal to say it. Over the last 20 years, there has been a 73% correlation between the annual.
So, so those numbers that we got yesterday from the Purchasing Managers Index, it was showing a lot of pressure, demand pressure on the supply managers, right? So that number yesterday was one of the first really significant data points that I think people will point to, showing that the inflation is on its way. Okay, and it is on its way. Okay, just to tell you, just telling you, it's gonna come. The Federal Reserve says it's going to come. There's a lot of pressure on the guy, on the supply side. Some prices are going to rise. And the Federal Reserve just says that it's a temporary thing. So I've read some things that say that if the Purchasing Managers Index gets over 60, that it's actually like really negative. Anyways, so there's this whole thing. I guess the whole thing is that you look at the situation that we're getting right now. It seems that you get the Federal Reserve is pumping too much money into the economy, and it is causing like rampant speculation and volatility in the markets that you normally wouldn't see. And yeah, and on top of that, JP Morgan saying, like this economic growth, because of the amount of money that they're putting in and everything, could continue until 2023. So for another 2 years, it's like, oh, okay. So are we going to have this kind of a market for another, for 3 years, basically? It kind of makes you wonder, don't you think? That's kind of what's going through my head, because I'm like, can we really sustain this kind of stuff? Like, this isn't the first blow up that we've seen either, right? There was the SoftBank thing, right? Now there's Archegos, and I'm going to bet you that they're not the biggest or most important person out there taking on too much risk. I'm going to bet you that there's plenty of other people that have taken pretty leveraged bets in this market. They're probably just not as stupid as Archegos was about it, And so I'm still really concerned about, if you get like a 10% correction, you could get something that like really expands out of control. But then because of the way that the markets are, it's going to be like, huge, disaster, markets freaking out, government maybe thinking they have to step in, and then as soon as the liquidation is done with that excessive leverage taken out, assuming that it doesn't leak into broader blow-ups, the markets would immediately go right back up to the highs again, like it has with Archegos, The viewpoint that all the good news has been priced in has a broad following, but it is probably closer to the truth that prices have stagnated because of subdued trading volumes, says Kenneth Bro, a strategist at Societe Generale. So here's another thing we want to talk about, so this is just kind of like the tea leaves that I'm reading, things I'm noticing in the market that we might be able to use as context later on when other things happen. I'm noticing that there's an evolution occurring with the retail traders. So it used to be that there was just excessive activity on the part of retail traders buying out of the money call options in stocks. And they saw that was moving stuff, right? Well, the GameStop thing came and went. There's probably the majority of the retail traders that got in on that are down right now, right? Because most of those people will have gotten in above 250 essentially. We're like 200. Anybody that's bought in more recently is probably up. But here again, probably what has happened is some people with a decent amount of money have bought in, and That's why it's holding this inflated price, and they're not selling, essentially. But they're also looking for a squeeze that I don't think is going to happen. I don't think that there's enough shorts on this thing anymore. It's been such a long time. Can't imagine why anybody would still be holding a short position in that thing. Yeah, so that might be like a slow and painful death. You know what I mean? So they kind of evolved, and there's been some statistics going through showing that the small orders, like, you know, just for one options contract, which is indicative of retail traders, has been much less out of the money options and much more buying protection instead. That essentially the retail traders are starting to hedge themselves with the options instead of using it to take on risk. Using it in the same way that a lot of hedge funds use it, essentially. Interesting, right? Well, so then I go to Reddit. What am I seeing on Reddit? Well, one thing was there was two threads on the algo trading subreddit of people basically asking, like, what is the point? There's no way that you're going to beat an algorithmic trading firm. And there was a lot of pushback in the thread, as you would expect, but there was also a lot of, oh, you know, I'm doing all this algorithmic trading and I'm not really having success with it. Isn't that interesting? Maybe that's something that I should focus on more in terms of the, like, does technical analysis work? Is pointing out that, you know, there's all of these people doing algo trading out there and they have a hard time making money from it. So why do you think that it will work for you with, you know, less strict rules? I don't know. Anyways, so there was that. I'm also noticing, though, there was a thread about S&P 500 futures, and there was a number of people in there talking about it, and the way that they were talking about it, it was pretty clear to me that they were using Thinkorswim. Yeah, some even straight up saying that they were in Thinkorswim. So it seems to me that some of the retail traders that came in on this last thing have now found the gateway drug, right, and are doing futures on Thinkorswim. And it's only a matter of time before they realize that the commissions on Thinkorswim are just absolute death and they move over. Yeah. But it's like, it used to be like everybody was winning all the time. Now, when I start getting on there, I'm starting to see this group of people that got in over the last summer, starting to get frustrated. You know what I mean? It's like they're getting frustrated and they're moving over into different instruments and things like that, trying to find more fertile ground. What's the commission on Thinkers? I don't know what it is. It's a lot more than what you pay on AMP, though. And it changes all the time, of course, too, right? But I don't know. I just don't think that Thinkorswim is a very good platform for trading futures. I think you just open up a second account, you know? But whatever. Well, E-mini, the pressure coming off a little bit there, I would say. No? Thinkorswim, a product of U.S. brokerage company TD Ameritrade, is regarded as one of the best trading platforms worldwide? I guess. I can't really think of a stock trading platform that is better than Thinkorswim, because the only other one that you really get in that space that I think is competitive is Interactive Brokers, and their software isn't exactly the greatest thing in the world either. So they've both kind of got pros and cons in that spot. Probably more serious that you are, the more likely you are to go to Interactive Brokers. But I'm not sure that one has an explicit advantage over the other one. Stock trading platforms just aren't that good, in my opinion. When you think about it, futures trading platforms aren't actually that amazing. I mean, they're a lot better than the stock trading platforms, but here I'm going through And when you start to get into certain things, all of a sudden you realize, oh, what is provided is actually woefully inadequate. It's really highly geared towards the type of trading that most retail traders do, which we know doesn't work very well. Day trading Z, what? Yeah, I don't know. Thinkorswim's okay. I have it installed on this machine and we open it from time to time. If I want to look at options, I'm going to open up Thinkorswim, but it's got its downsides too. Brad says inflation is here. It sure seems like it. Well, oil, when we came in here, oil was the only thing that was really up, and they were up a good spot 9%. Since that time, they've taken a good step back, and they are back to 59.55, back from 60. Oil is moving. And they've been hit by a couple of surprises too. Like yesterday, they were up. I mean, they were up. And then the numbers came out and it was a surprise build. Yeah. I can't get any Kubota tractors. Everything is costing 3 to 5% more. Yeah. Everything is. So it seems like metals in particular are really inflating, which is kind of funny that gold and silver just continue to go down. I don't think that there's somebody really big that's short gold and silver, and at some point they're going to get out of it, and gold and silver are going to take off. But how far down are they going to go in the meantime? I don't know. Is it going to be more than 3 to 5%? Very soon. Yeah. I think that we're going to get a high amount of inflation, but it's not going to last very long. It's not, because one, the supply side is going to catch up. One. Two, the demand side is going to come off. Like, you're getting a lot of demand coming in now here in the spring. It's probably going to be less in the summer, right? Because there's like this backlog of stuff that people want to do, and they're going to come out and do it. One. Two, there could be more virus closures, so that could reduce demand too, right? But either way you look at it, probably you're going to see a really huge spike in inflation, and then it's going to come back. What I'm concerned about is that it seems to me that inflation expectations are a key component factor, in how this all works. So if we get inflation comes up and it goes like this, but then over here people say they see the rise in inflation and the rise in expectations, and so it stays like this. And then because of all of the government spending, it starts taking off and it does this. The Federal Reserve says that it's going to do this, right? Federal Reserve says it's going to do this. Well, they say that it's going to be like, it's going to, right now, it's been spot 1 per month or whatever. And they're saying it's going to come up, and then it's going to trail back off, and it's going to be like, come back to like spot 3. And I'm saying, I'm worried that it's gonna be persistently high, and then what'll happen? What do you get then? Is then if some sort of a risk event happens that harms inflation, like say a currency war with China, would maybe be one. That you get this. I feel like we're leaving ourselves very vulnerable here. You know what I mean? I don't know, but perhaps the risks from the economy underperforming are greater. I don't know. That's one you can't really know for sure, I saw an article that said California was going to relax COVID restrictions this summer. Yeah. Well, did you see that it was like, oh, we're doing so well that we won't really open up until like August. I was like, what? You're not doing very well at all. See, California is kind of the aberration though, right? Because here's the thing. Why is it that states like Florida and Texas have been doing it as well as they have? Because everything that we've been told about what we need to do for restrictions to limit the spread and so forth say that Texas and Florida should be doing the worst, right? Well, so one thing is that Texas has opened back up. It's been a month. I would still say that you need to wait 8 weeks. 8 weeks, because it takes time for the R factor to increase. It takes about 3 to 4 weeks for that R factor to increase, and then 2 weeks to start seeing, like a couple of waves come through, and then you can actually see the increase, right? Uzi says we've been open back up since like April of last year. Yeah. Well, in Utah, we haven't like gotten rid of masks, but we're going to be getting rid of masks next week, I think. I don't know. I think a lot of businesses will still require them, which is kind of weird because they were late on them. Anyways. So there's that thing. You need to wait longer in Texas to really see. 8 to 12 weeks after that, then you'll see what the increase is. And I'm going to bet you that there will be an increase. I don't think that it will be very problematic. I mean, it will be a small bump, but I think that they're close enough to herd immunity that they'll have an increase in cases, but it won't be a real concern, right? But then there's the other one, and the more important one, I think, is that sunlight is much more damaging to the coronavirus than originally anticipated. So everybody getting out and being outside and it being hot and everything is going to help a lot. Okay? So it's all warm in all of these southern states. So you could come in and you could say, oh, well, the reason why Florida is doing so well and Michigan is doing so terrible right now is because it's a lot cooler in Michigan right now. Yeah? Problem. If that's the case, then why isn't California doing better? That's why I said they're the aberration, right? And so California really becomes the case study to suggest that the lockdowns aren't as effective as we thought. I've been listening to Dr. John Campbell over the England, and he believes vitamin D is worth studying further to help offset COVID. Yeah. But then that would suggest that staying inside is really bad. I don't know. It is really odd because this virus has had a tendency to just defy our expectations and predictions over and over again, right? There's so many things that happen in places that we didn't expect it to take off and places that we did expect it to take off that didn't, and vice versa. That is just a big mess, I think that what has happened in the public is that all of the people in the public, when this started, they were all interested in the numbers and trying to predict everything. And then when everybody's expectations ended up being wrong, they just gave up on it. You know what I mean? Because I remember earlier on when we were so focused on the case numbers and everything, and now nobody cares. For the record, I never thought the lockdowns were going to be effective. Well, I still go back to there are many places that if it had been any worse than it was, it could have been really bad, right? We could have gotten through this with minimal impacts, with just good, honest public messaging and maybe mask mandates. Yeah, well, the full on restriction that they put in place when Donald Trump was in office, back in March of last year, a year ago. I don't think that was very effective. And it wasn't because the lockdown itself wasn't effective per se. And instead, I think it's more that they were putting lockdown restrictions across the whole country when the only places that really needed it at the time was New York, right? Ian McCormick, hey, how are you? I remember you. See here, Uzi, I mean, just think about it. Florida has been a year with no restrictions except masks. You'd think we'd be top tier worst at this point. Yeah. Well, and remember when I was talking about the whole summer thing that I was like, the summer is an opportunity to build up herd immunity. You should let people go out and catch it. Tell the old folks to stay home. Let the healthy people catch it in the summer, because in the summer, the R factor isn't high enough to overwhelm the hospitals, and that will prepare you for the winter, right? And then what happens? A lot of places stayed locked down through the whole year, like California, and we had a second wave in the winter, just like I had always predicted. But I've been wrong about so many other things, so I don't know. Well, let's not say that I've been incredibly effective at forecasting corona, right? We went through spring, summer, fall, winter. But in Florida, there was a spike. I mean, there was a time period. When was it? I was like kind of early fall, right? When there was a lot of cases in Florida. And it was like the summer wave had already dissipated. And they were kind of hitting Florida, mostly because that was like the only thing that they could like bash on at the time, right? But in the end, it turned out Florida did better than everybody else. In the end, that was another thing, remember? Whew. Last April, May, and everybody's like, the United States is doing so terrible with coronavirus. Look at how much better it is in France and Germany. And I said, yeah, but like this thing isn't over. Let's wait until the whole thing is over. And then you can analyze which policies were effective and weren't effective. Yeah. Because Europe ain't looking so hot right now, right? The point isn't whether or not there's going to be a spike, it's whether or not they moved the goalposts, obviously, right? But you're right. I think that because Florida never really closed down, that they built up more herd immunity so that when the winter came and there were spikes, it didn't overwhelm the hospital system. I think that the same thing happened here in Utah. Enough people caught it over the summer that it prevented the healthcare system from being overwhelmed in the winter, because we came close in Utah. They were concerned about it. All right. They were running into capacity issues. I feel, I shouldn't say I feel, but I think that if Utah had stayed locked down like California did, that they would have reached hospital capacity. That's what I think. We should have just let everyone catch it. Well, there should have, maybe, I don't know. There could be maybe ways of doing that. Because here's the thing, is everybody said that Sweden pursued a herd immunity strategy. No, they didn't. They really didn't. In Sweden, everybody locked it down too. It wasn't compulsory. So everyone that could stay home, stayed home. And everybody that needed to go out to work every day went out to work. But everybody still wore masks and limited going outside and decreased their economic activity overall, just like every other country did. The government just didn't have to mandate it in Sweden, you know? So I don't think that any country really pursued a herd immunity strategy. And I think that if you just straight up told everybody, okay, catch it unless you're vulnerable, I don't think that would have worked very well. I think that enough people would have caught it off of that you would have a problem with the hospitals. But you could have done it sequentially. I don't know. Maybe you could say everybody who is A through E, go and get it now this month, and I don't know if that would be very responsible, but I don't really think that anybody tried a herd immunity for us to really compare on that one, right? The biggest case of it was a mass hysteria, I would say, Andrew. So here's the thing about a mass hysteria that's people don't catch very often, is that it's like widespread fear and obsession over a danger, real or imaginary. So that coronavirus was a real threat. Does not make it any less of a mass hysteria. Pure sociopathy, you have been well, obviously it would be optional, but yes, it would be like you have been designated that you can opt into getting COVID now. Yes. I would have done it. I honestly, if we were back in late February before all this began, because remember, we were talking about all January. Remember me joking about it? I feel so dumb about that now, but I remember joking about we were going to go into a zombie pan. Obviously, my exaggeration was worse than it ever got, but I didn't think that we were going to lock down. No way. And at that time in February, if they had told me, okay, you can catch it now and then you don't have to worry about it and everybody else will be worrying about it and not going out and everything because it'll be too bad, then I would 100% have done it. And, well, the HS says, guess you don't know about the long-term effects of the virus to the human body. So I have read some things about the long-term effects of the virus. I feel that is like a really big FUD point because we don't really know what the long-term effects of it are. Like some people have said that, if you caught a serious case of it, then yeah, there's gonna be some damage to your heart and stuff. Sure, but if you just have a mild case like I had, I don't think that it's had a long-term negative impact on my body. And I don't think that we have any evidence to suggest that it does. I'm so frustrated by the how policymakers and media would pick and choose, Fauci in particular, would pick and choose when something needed to be confirmed by empirical evidence and when it didn't, right? So they would come out and we would say, well, it makes sense that the virus won't be able to spread as well when it becomes summer. So we should be able to open back up when it's summer because the R factor will be lower. And Fauci said, well, we don't have any evidence to prove that is the case. So we shouldn't do that. We shouldn't open back up because we don't really know. And meanwhile, I'm sitting here okay, it's a coronavirus. What makes us think that it's going to behave any differently to sunlight than any other coronavirus ever? It's a lipid. It dries up. Come on. Right? That one was incredibly retarded. And then on the split side, it's but we don't really know what the long-term side effects of the COVID are. So we need to make sure that we close everything down because even though we don't know and we have no evidence to suggest that it's going to be that bad or that it's any worse than any other time that you get pneumonia, we that's enough of a risk for us to be concerned about, and then split side. Well, we don't have any evidence to suggest that a vaccine would have long-term side effects, but it hasn't been in testing for long enough. So shouldn't we be concerned about that? But, so it's there's no empirical evidence to suggest that a risk will happen, but there is a risk on it. They picked and choose when they decided that risk was a big deal or when it wasn't. And it was completely arbitrary. It was certainly not evidence-based. I was so pissed when they canceled my classes. I was having so much fun at school. think that was sarcasm. Well, E-mini, okay, decent move back up here. It's a pretty slow market today, though. You may risk getting it again, just a slightly different version, and I'd be fine with that. Like, I just, it's like, it's not going to go away. I don't know. That's where I say that I really feel that it turned into a full-on mass hysteria, because a lot of people were having fears that were completely irrational. Like, young, healthy people should not be afraid of going out and catching it. If you're a healthy person, that means you're not obese and you're not old. The chances of you dying from it are like nil. It's so unlikely for you to die from it. And yet there was masses of people out there literally terrified to walk outside of their house. And there still are. There is still this huge fight in some areas about whether or not to open the schools back up. Even though the science at this point is abundantly clear that it is safe to open the schools. How do you explain that? There's only one explanation, folks. Mass hysteria. It was a mass hysteria. And you know what? So here's another theory. Oh, man. My mind is kind of jumping all over the place now. I'm getting a little ADHD. Maybe I should try and focus. No, I want to share this. People get it for the second time too. Yeah, and they get over it the second time too. And their second case is likely to be more mild. I'm not afraid of catching it a second time. The problem is that you cannot help people if they drive wrong if the hospital is full. Yeah, but again, I think that the public response is not in line with the science. You know, so I'll put it on that. You know, my position is that the science suggests that we should reopen schools, and there are some areas of the country where they're still having difficulty reopening schools because people are being irrational. The common cold is a virus. I get it every year. Yeah. I mean, so everybody gets sick at least once a year, usually. Once every other year. Yes, but young, healthy people transmit to other not as healthy family members. Yeah, so that's the whole thing is that if you are a not healthy person, then you should be locked down. If you have a non-healthy person in your household, then I guess you have to lock down. But everybody else... You know? So I have a theory. Talking about mass hysteria. I have a theory that if you were involved in a mass hysteria, it makes you more likely to be in a subsequent mass hysterias. Okay, so a big sell come in there. I hear SMB snaggled the central bank examines all tools and is still searching for more ways to execute monetary policy. I don't think that is what moved the market there. We have been seeing these kinds of moves a lot lately, and the market tends to just ignore them and move up. So anyways, I think that if you've been in a mass hysteria, that you're more likely to be involved in a related mass hysteria later. Because all through the Donald Trump presidency, I saw time after time after time again, the media created mass hysterias based on complete falsehoods. People going absolutely bonkers over things that simply weren't true. And the coronavirus thing was like just the culmination of all of that. And it was like the people that had really bought into the mass hysteria were like the most vulnerable to believing things during the pandemic that you know, being overly fearful. And the people that were on the other side of that mass hysteria, the other side of that meaning that there's a mass hysteria of not being concerned about it too. Or kind of on the same thing. They had become dead into it and didn't take the seriousness of things, the risks seriously enough. And because people just don't look at evidence to make their decisions. I'm curious what all the COVID hysterics are going to do with the rest of their lives, because COVID isn't going away. Yeah. Okay, well, so here's the market is open up here. The initial market action appears slightly bullish, but we had that big sell just before, so don't know how to sort that one. This is kind of a really odd situation I've never seen before, where we've had a sweep like that before the market opened. I will say that the amount of activity that we're seeing at the moment seems to be a little underwhelming. I'm not sure if I went long here, if I would be able to get my targets or not. Okay, well, that's a little better. I think I'm kind of missed the best spots though, man. I'll put a feeler out there. Volume still looks a little weak to me. I've been trying to sell the opening candle for the past few weeks. Well, yeah, the open is a good place to try and get in on stuff. It's just a little today and yesterday's open are a little iffy. So the Treasury, the 10-year is thickening up here. Even though there's not a lot of volume coming through. Okay, so a bunch of selling there. And they cleared it. I was thinking, I've got an okay spot in line, but then when they filled me, they cleared it. Ah, shit. Was only trying to catch like one tick off of that one, so for me to have lost a tick on it was kind of sucky. And the E-mini tumbled a little bit there, but So oil has erased most of its gains. The only things really still positive that was positive when we came in here is corn, spot 41% increase. On the indexes so far, it appears that the Dow is leading the way. YM leading the way. It was spot 1.5, ES spot 1, NQ down spot 4.3. So tech's struggling a little bit here. Let's see, that story win is not, I'm not going to read it right now. Oh, wait a second. Oh, okay. Cool. I was going to say that was a good fill. Do you mean you're going to push up again? Yeah, but looks like it. I don't know if it's going to be like another measured move. They're still kind of struggling, but this looks like, you know, the kind of positive churn that we've had lately. I relate that Q position is so great, right? So the 10-year is kind of selling off there, but the 5-year isn't quite ready to go yet. It looks like. So reset it right there like that. Yeah, they're coming back up there. So the dollar is kind of chopping around here. $92.26 at the moment. Treasury ticked up there. EOM 5K trader turns to scalping to break even. Wait, what? I don't know what I'm doing here in the 10 years. I was trying to catch one. It failed. I tried to catch one on the other side. I was able to get it on one of them. Now I'm trying to get it again. So Ouch. Did not fill me there. Well, I am taking a haircut there as well. Does that happen? See, this is why I think it would be better to just have a bunch of DOMs up. I don't know. Maybe I could just have the YM and the NQ up there like that at least. I removed my oof once I noticed it. By the way, we set the date right. Yeah? Yeah, it's the 7th. Okay, cool. And the E-mini there. So I feel like this is one of those situations where you get really frustrated by the treasury. Because I feel like it's reacting to me. Yeah? It's like as soon as you do something, all of a sudden the situation changes. Yeah, and now all of a sudden it's flipping back up when I was just trying to pick out a tick. Ugh. And the way they're stacking ain't making it easy to do what I want to do. I could go back to the trade that I was trying to do earlier. Cool. Well, they created a hole here in the E-mini, but they're not falling back into it yet. Still staying up. Evan says he's very confident Fed will be adjusting policy if they see too high of inflation. By the way, did Gabby try taking any trades off of that? No, she did not. Algos work just as good as the imaginary trend. There are some things that the algos can do that I can't do. But yes, if you're using the analysis of past information to make your trades, as I have stated numerous times, the conclusion I have made based off of a long amount of study is that price predictions based on past prices is not very effective. Not very effective. But then you come in and, like, I remember yesterday they were saying, oh, there you go, making a prediction based off of the way that the price has been moving at that moment. To which we come back to, okay, well, it's not very effective, but unfortunately, in some situations, it's all you've got. So then what do? You just don't trade, I suppose, but... What is the alternative? Well, I think that one alternative is making your decisions based off of the current prices, which would mean comparing this instrument to this instrument, and taking into account economic numbers and news and things that are happening like right now. You know what is effective if you hit the like button for speculators that this will be very thank you win. Wait, we need to I really need to just make it read those out.
Winston's mom says, not very effective. You know what is effective? If you hit the like button for speculators, this will be very effective in helping his channel numbers. Thank you.
The fundamentals, yeah. Okay, like that one, the work did out that one. They pulled a nasty head fake there in the treasuries. Oops. Oh, by the way, I didn't see Noel. That's a name that's been here before, yeah. So, hi. Okay, YM still kind of hanging on to its gains, but the Death Cross is a technical pattern. I've tested the Death Cross and I was not too impressed with it. So here's the thing that I would always look at. If you hear the media talking about a technical setup, is that the statistical properties of that technical setup are almost always more complicated than what they say. They just will say, oh, a death cross or a golden cross, are bearish and bullish. But they don't tell you that, okay, the win rate on it is this, and here's what, the kind of runners that you get and the kind of behavior that you seem to have around them, right? My recollection with the golden cross is that that doesn't mean that the market just takes off right after that. That there's still difficulties. Oh, come on. I'll take it. It was probably a bad idea. I probably should have just sat there unfilled, but... Yeah. I'm starting to think that over here in the E-mini that I just need to bring things in because it's like super tight, right? IVPMI at the top of the hour, you say, Lynn? There's the Canadian, yeah, here in 8 minutes. Not really a significant news piece, though. The G20 finance ministers and central banks are meeting at the top of the hour, too, apparently. Adrian, I'm talking about bringing the targets in Discord, and Adrian's like, I only got 3 points from my first trade, and I was thinking the same thing. Damn, I risked 4 points for that. This doesn't move as much. I mean, there was that initial move up. We missed quite a bit of it because it happened before the open and it was quiet. But, look at this. We've been in this for almost 5 minutes already in the ES, and it's still right at our price. These finance ministers might come and say something that affects us. Okay, so when they broke through, there was a little spurt of selling that came through as they did that. So I'm kind of wondering if I shouldn't go for the original 4 points. Of course, it could just not do anything and stay there again. Maybe that was too many people bailing on that. E-mini and Treasury's kind of doing inverse correlation today. The Euro now the top performer, huh? Speaks more to how weak most of the markets are today, and less to how great the Euro is. Okay, so here's the IVPMI. I don't know if the market is reacting to that, but it was much higher than expected. 72.9 versus 60. Hopping out over Twitter from Forex Live. I think to get the trade that I want over here in the treasury, I have to be a lot more vigilant on it. So pretty good excursion on the downside. I did get the 8 ticks, not the 16. It's recovering back to where it started for that excursion. The overall delta is still very negative. I mean, it's been negative all this week, but I would say it's very much so today. I would dare say pronounced. Okay. What did it take on that one? Okay. I actually think I might want to flip there. It's just like all of a sudden the tape has kind of, the base of the tape has kind of increased in the E-mini. So okay, that one working as intended in the treasury. Happy about that. I could probably move that target. Like if they're going to touch the high, they're going to go through it, right? In fact, why not? Looks like NQ wants to test yesterday's high. The book certainly has a lot more activity now that they've kind of turned back long again, right? Oh, you say it tested yesterday's low already? Yeah, I don't really have an NQ1 chart up, so. The marketeer says the boy who cried inflation. Oh, I wish I could read that. So the indexes have all turned positive here now. See the 5-year down ticked there. See if the treasuries come down here now that the equities are turning a little bit more bullish. They're trying to squeeze them right there in the 10-year. Is that 48, 47? That's unusual. Okay. Five-year upticked. The other's not following him. Following her. Looks like she gave it up. Yep. Hey, Stick, how are you? This index is just so sluggish right now, isn't it? I mean, you get little spurts, but Hmm. I feel like I'm noticing sometimes where both the treasury and the E-mini tick up, but it seems like the E-mini ticks up first, and that the treasury is reacting to the E-mini, not the other way around. I don't really know how to sort that out, which one is really which, because it is like really fast. But the treasuries don't seem to be pushing in that direction or anything like that, right? They seem pretty aimless right now. Okay. I'm mad that I didn't get my fill at 23 half there, because I've had the opportunity to take it at 24 many times. Chinese military spokesman says PLA tracked and monitored a U.S. warship which sailed through the Taiwan Strait on April 7th. They're mad about it, apparently. If a retest is positive, you're in. They're awfully stuck, aren't they? I must say, though, this particular action isn't terrible for trying to play the queue in the 10-year. I'm not saying that I'm doing awesome at it or anything. But, it's churning. I'm learning here. There's some downside excursion in ES again. Already some pushback on it, though. So just note here on the spread, right? 5-year is up a tick, 30 is down a tick. E-mini holding pat. I suspect that they're going to tick up because, especially if anything at 24 3/4 pulse, seeing that like that flip, they should be trying to tick up in the 10-year, but it's not. They're reluctant to do it for some reason in the 10-year, even though it looks good based on the 5. Okay. So they did pull them up. The spread is still there, but they pulled them up. They took 36.70s. They had to take all of them to do it too. Which is not necessarily the best thing for our order at 24.5, but we've got an okay Q position on those ones, so we might be okay. Good deal. It's been churning around 40.68 for quite some time now. A volume in the E-mini, I would say somewhat light. I think the numbers are okay. We're getting like 1,000. I don't know. It's just not as good as it used to be. Makes me concerned for what kind of activity we might see in stocks over the summer. It might get really boring. There was some good nibbling away at 25, but it was very short-lived. Yeah, okay. 5-year holding. UK medical regulator warns under 30-year-olds against using the Oxford/AstraZeneca jab. What? See, so this is what I'm talking about here, where I'm like, HF says that's why I quit ES. Oh, I see. Going back to 8-tick winners, it isn't enough for you, so you've got to go and play the high roll game in NQ, huh? I see. So there's a break of the highs. Good amount of volume trying to follow in as it does so, but it doesn't hold it for very long. That's funny. It also looked like everybody was just waiting for the break and then decided to buy it when it happens. HF laughs because he knows I'm right. I think that we can go back to 8-tick winners or losers in ES, and that we should be grateful for it, because what was happening during the pandemic was really crazy and frankly always made me a little uncomfortable. And as long as we're trading like 1,000 contracts within a reasonable time frame in the E-mini, I think I can be okay with that. So this one right here, I'm pretty sure this is the correct numbers here. I mean, it's telling me 1,000 contracts every 300 seconds, which is like what, 5 minutes? 1,000 contracts every 5 minutes? That's not terrible. It's not terrible. I'm gonna sneeze. I like the ES compared to NQ because it's not dodgy. Well, yeah, I like the ES compared to NQ. For sure. Because it acts like a thick instrument. I don't know. I think that scalping in the E-mini, dealing with the Q, could get really interesting if this continues and the ranges and overall decrease and stuff. Because right now it's only been like this week, right? And there was some points in this week where like the activity really increased up. But otherwise, I think you'd have to say that a lot of retail traders are probably starting to get really frustrated because they're not used to seeing this kind of low volatility action, whereas those of us that have been trading in the post-financial crisis era are quite familiar with what easy monetary policy does to volatility, right? So, and I never really got the chance to really play it when the E-mini was really thick. Hey. Okay, so I don't like that 25 half took me out with only 919 because I didn't have a good spot in the queue. That kind of means I could have gotten more, but I was able to work it out in the treasury. I'm wondering if I was just using one contract that whole time, if I could have done it. So I don't think that the win rate on those is necessarily as good as it should be. I'm kind of noticing if like say you get a fill at 23 and then it ticks up 23 half. Okay, so you could just take the one, but if it ticks up and then immediately it flips and 24 is less, like you might as well hold that until that changes, right? Until the book changes. It seems like if I'm going to do what I think I want to do, if I'm going to do it in the treasury, I think I would rather do it in the E-mini. But if I'm going to do it in the treasury, that might be a good place to try and play the Qs. I'm going to have to be really active about it. Because there was a couple of those where I took... Oh, did I get the two fills on that one? So like the first one, it ticked against me, and I bailed out at -2. That shouldn't happen, right? I should be out -1 or break even, and in that case, I might have been able to get out at break even if he'd been more concerned about the way that it turned on me. You find YM safer than NQ and ES? I don't know. I think the advantage to ES is just that it's like the best economically, like in terms of how it responds to the economy and everything. I think that it's the most accurate. Whereas when you're getting into the NASDAQ and the YM, you really have to start thinking about what are the components that make those up, right? Same with if you're going to trade the Russells. R2Y is, although I haven't really ever. So let's pull R2Y up, eh? So here again, the Russell 2000 is also, it's smaller caps, right? So you got to keep that in mind. Seems like RTY moves a decent amount. It's a little bit more like the NASDAQ. Isn't there another one in the Russell that is way more responsive? Let's see here. CME Group. So like the ES has the best one-to-one representation of the economy as a whole. Yes. And I would put it as like when you are reading analysis and people are trying to sort out what a certain thing means for the equity markets, what they say is going to be more indicative of what you'll see in the E-mini than you will the other indexes. Because the other indexes, you have to factor in more of what the components are. Yeah. Russell. RS. No, that's not right. RS1 M1. Oh, there it is. Oh, that one's even worse. Okay, the oil numbers are good. So it looks like that the equity markets might be moving a little bit on that. It's a build. What do you find here, Win? I was hoping that one of the Russells would be thick, but they're all pretty loose. This one's got a spread. Look at that spread, man. You could actually make money in this one, dude. I don't know how much money you need to have to trade it, but think about it. Like if you just sit there at 9.5 and on the bid and the offer and you play that, the spread, totally you could do it. It's not many futures instruments that you can play that kind of a game. Yeah, that's interesting. Can I just download it? Oh, they've got 3. Unable to handle this request. Let's try Chrome. You gave me a NinjaTrader indicator that looks like one worth looking at. I don't think it's actually going to let me download it, though. Yeah. HTTP error 500. QWAVAT. What is that? We're looking for market patterns during a huge period where volatility was low, and any signal of market movement is important in this scenario. Well-adjusted moving average strategy is a great opportunity to find good points. QWAVAT combines exponential moving averages and ADX variation to look for inversion points. So it's going to be slow. And QW is a new concept indicator, stands for limit of length. That's what we're looking for in situations where the market is moving sideways, but there is trending inside of the curve. The challenge would be to identify the length of the curve and estimate with a good probability that the price would rebate. Heh. That one gives kind of weird signals too. That one I would like to download too. Download. Download. It won't let me. It won't let me. Well, they've got to be selling something, right? Sample MACD, come on. Buy now. Let's see how much it is. Oh, yes, of course, the buy now link works. It's only $50 for an algo. Okay. Okay. Well, their prices are at least reasonable. I think I could probably write my own strategy off of their indicator if I would let me download it. Oh, well. HF says a $50 algo, right? It's really kind of funny, actually. Ooh, I'm getting an idea. If the market analyzer will not let us add a button to the control, maybe it will let us open up a new window so that we can put the button on that new window. You think it could work? HF says yes, exclamation point, exclamation point, exclamation point. I mean, I think it could work. Don't tell Steve, he may try to steal your... Oh, Steve couldn't write something like that if his life depended on it. Are you kidding me? That guy. Did you see the shit he was posting yesterday? Oh my gosh. So like on Reddit. Oh my gosh, freaking Reddit. Ugh. Dude, reading the trading subreddits on Reddit like really irks me sometimes. Like, I like to get an idea of what other traders are doing and everything, but it's just the same crap. You know what I mean? And there was this guy, and he's like, I've been working really hard for like 9 months and haven't had any success, and I finally put together a system that works. And this has like 500. It was a lot of upvotes for the trading subreddit. All right. Like it was popping off. So I go and I look at the thread, and this guy, he's just got like the monthly profits. So over a month, so the month of March, essentially, he took like 100 something trades and made $87 over a month, which it was actually like 240%. So it's a guy trading small stocks with a lot of, lots of trades, scalping it somehow. I wonder what his taxes are going to look like, because I don't think that he's trading it with factoring in wash trades and stuff. But anyways, and so Steve was out on TikTok yesterday, saying, "Oh, this is one of my students," and he was like, "Okay, so now that you've had this one successful month of trading, like you've made it." One month is all you need, guys. So that's what Steve was up to yesterday. Freaking, I don't know what I'm going to do today. I have a skit, but I'm going to have to do that in the evening. So maybe I have to skip day or something. Oh, no, I know what I have to do today. So somebody, Steve was making fun of Robinhood yesterday. Basically saying that if you use Robinhood, you're a cuck. And so somebody asked what he uses. So I think that we're going to have to show what he uses, yeah? Like, you're going to have to be some platform that you can't actually use, right? Like Ready or something. Yeah, Ready Execution Management System. Refinitiv. Yes, there we go. That's what we're going to tell them that we use. Simplify your workflow to trade smarter and faster with Ready EMS, the broker-neutral multi-asset execution management system that can give you a competitive edge. I wonder how much that actually costs, because I thought that it was you could only get it from hedge funds. Oh, these are the guys that have Icon? Oh. Interesting. Every month is different, lads. I know, right? It just bothers me so much that somebody's like, "Oh, I was profitable 1 month," and everybody on Reddit is like, "Oh my gosh, we're so excited for you. Wait, how did you do it? What's your strategy?" I'm like, guys, it's a freaking month. Like, anybody can do that. Jeez, just always sell the E-mini. I promise you'll have a profitable month at one point. Just always buy, and if it goes down, double down. You'll probably come out profitable on a month. You could have come out profitable in March using that strategy, right? Definitely February. Actually, no, February had a little bit of downside, huh? Anyways, they show me more pictures, features, and benefits. That is definitely it. Where's their DOM? So that'd be funny. I can tell them that he uses the Ready Plus, but that he uses, but he doesn't use Icon. I'll say that he uses a Bloomberg terminal. Yeah. And then that would, HF says every month is different. Yeah, lads on Reddit are mostly new to the game. I feel so. It's like just the most clueless group of traders, I feel. Because there's so many things that I would think, hey, you know, if you're doing this, you would probably want to know right from the get-go, and they don't know any of those things, and it's just so bad. And I'm just like, what the hell? Product in action. Let's see if we can search. So ready plus price. From, who are they from? From Refinitiv? Yeah, acquired in 2017. I remember when Goldman owned it. It just says, I'm so used to the charts, it's kind of difficult for me to read the tape alone to trade. Well, oh, by the way, where did I get out at? 26. Okay, so it's gone 2 more ticks. Yeah, I never reset it. We're good. You know what is one of the things that I think kind of really gets, how do I put this? It's almost like thrown in your face when you're not using a chart. When you really can't see the data historically on a chart, you realize how random a lot of market movement really is. Like seriously, like it's sitting here in the 10-year doing all of that. I wanted to go long first, and then they dumped on me first before going higher, which was really flippin' annoying, by the way. I was just trying to play the cues, and I was like, well, I know I can get long here, and I'm pretty sure that I can get fills here, 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 and here. And it seems like it's better to use multiple contracts just because you can take advantage of more opportunities, right? But anyways, you know, it was like once I get there, it's like, you know, the thing that matters to me the most is whether or not I can actually get a fill, you know? I'd like Ninja to have the DOM on the chart. Well, there are a lot of free add-ons out there for NinjaTrader that will show you level 2 information on the chart that are quite good. The thing, you know, like my main problem with the Ninja chart is chart trading. The chart trader. I don't think the execution on the chart trader is very good. But it's kind of like if you're going for arbitrage, okay, you don't need the chart really, do you? You've never come across one? I have one, in fact. I don't really. So I have one that's like a summary level 2, but it wasn't complete, so I didn't include it in the indicator package. But there was one that displays on the actual chart and it shows them all. But if you just search for it, if you just search like Futures IO for level 2, there's more than one. There's more than one. But that's where I get to, like, I don't know, man. Like, when it's moving all crazy and stuff like that, the resting orders don't really matter. You know, like the resting orders, it's when it's slow that that stuff seems like at how much many resting orders there are at an individual price seems to matter. When I watch over here in ES, I don't really think that I pay attention to that individual numbers all that much. I just kind of keep an eye on what the overall liquidity level is, and that's about it. And I'm way more interested in how much it actually trades on the inside, and if it's significantly different from what is on the DOM out here, right? So something that I'm noticing a lot in ES is that there is a way more latent liquidity out there than what you see resting, because it's taking them a good 400 lots or so per trade in some of these areas. When it becomes thick, yeah, they're trading like 300, 400s to clear a price. I want to see the liquidity at the moment. Yeah, I don't know, but in the E-mini, the thing is that, like, it changes so quickly that, like, does it matter? Now that it slows down, maybe it will matter. But when I've been trading the past little while, I don't think that I've really been focusing on that so much. And then it turns into like the one thing that you can kind of see is large orders. So that came up on TikTok the other day. I made a TikTok about it. Somebody was saying, oh, if you see a really big sell order, that's actually a bullish sign, and vice versa. And everybody was like, that's bullshit. And he said, no, it's true. Look, here it is in a book. And I wouldn't trust a book. I'm not saying that it can't be a buy signal or a sell signal, but just if you see a big order, man, I mean, we all know, all you guys here that have been watching this live stream for an amount of time, and especially you old timers like Uzi, you know that you can get super screwed from those big orders, and that I in particular have been super screwed by big orders before, right? And so just telling people on TikTok, where you don't really get a lot of time to explain things to people or have any nuance, oh, if you see a big order, buy it, it's like that's a little irresponsible, you know what I mean? Wynn says there's too many trading buzzwords for you to know which video of yours to link. There's no video to link on it. You know, I was going to make a TikTok yesterday that was like, hey, let's just show people how to catch the edge. And I recorded it and I watched it and I'm like, nobody's going to watch this. I didn't like the video. I personally didn't like the video. And the more I thought about it, the more I was like, I really don't have any desire to share those things that really matter on TikTok. Like they're really getting into the DOM. It's like if they really want to learn it, then they'll find the YouTube channel and they'll come and watch the stream. But most people on TikTok, they're just gonna write over it, and it's probably better that way. Anyways. Because I was also thinking, maybe I should start making some videos about that sort of stuff. But it's like, nah, like there's some books out there that you can read about that. And I don't know if it really should be common. It really should be underground. Word of mouth. If my analysis doesn't agree with my chart, I just don't trade. Well, that's a fair way of approaching it. The problem that I continue to have is that there are many times where I feel like I'm watching the chart and I feel like that something is going to happen, and the more and more time goes along, the more intuitive it feels to me. Like I just know, and I can't really explain why I think that the chart is going to do what it's doing, right? But then when I try and look at the kind of setups that seem to be working for me, and I try and, make it technical and programming it up and everything and go and back test it, usually it's like, well, it works right now, but it's not really a very good strategy in the long run. And that's happening to me over and over and over and over and over again. So when I come through and I've had periods of strong profitability, I've been doing okay lately, but I've also been kind of covering my mistakes, so I wouldn't say that it's very accurate. I look at that and I'm like, I think it's luck. I think it's just luck that the market is going up. And I don't think that I really have a truly strong edge in that environment other than being able to read the news and the sentiment. That's one edge that I feel pretty confident about. But some of these trades I don't know how I'm pulling it off, and I think that I think that there's just a lot of luck to it. Now in the treasury, I feel like that I have some good stuff, and I just get screwed over a lot. I don't know. The treasury is just really tricky, right? Seems like the market is waiting for the next cue. I don't know. So, like, if we get into the volatility index. Oh, yeah. I forgot that I have meetings at the top of the hour. So, I think this is like a good place to stop. We had a good day. And I didn't have to do anything crazy in the E-mini. And I made some money there. I only took 3 trades in the E-mini, actually, and one was a scratch. Well, 2 were scratches. One, I lost like 2 ticks on it, and then I made the 25 on that one. And I could have held that for quite a bit. Not quite. I mean, I got it at 71, 75, so it's cool. It's all good. I think there could be more. So if we just come into the chart here a little bit, let's just double check. 4088 is what it's reading, but I think that we were likely to underperform that a little bit. Yeah, so. Yesterday was very constrained. How much? I made $25. Here's what I made on the E-mini. Here, I'll show you. Here's the E-mini. So I had a scratch. This scratch actually did have some, so this one right here, I think could have been a favorable one, right? Like I could have taken it off at 8. And this one, I don't, but then it's like, well, why would you extend this one? I don't know. But anyways, so there was that one. And then if I uncheck that, I can see the treasury trades. So I got screwed over in that first treasury trade. And then I got the good one, canceled out one of those, but then I lost a tick. And then I got a really good opportunity at 23.5. So if I going back, I think these ones, I can kind of see why these ones weren't as good of opportunities as I thought they were, and why this one was good, because there was a good amount of trade going through there at 23.5 that allowed me to do what I did. So how many contracts do you trade? So in the E-mini right now, I'm trying to keep it to 2. But something that I have been doing, and the reason why I'm saying like I'm covering my mistakes is that there have been times where I've traded 5 to 10 contracts in the E-mini, because I felt like I made a mistake and there's a good opportunity to make it back. And you'll get away with that most of the time, but I wouldn't do it on a live account. So anyway, so a lot of those days like going back where there's like a $50, $100 winners. Like if I really go back, I don't know, I don't really have time to, but if you really go back, there's some of those. Probably my overall profit is probably $1,000 less if I was trading it live. Okay. But I do need to go. Tight markets. Volatility contracts. Is that the right way to say that? Contract. Decrease. Oh, they are spelled the same way. Okay, cool. Save? What do you think? Who would do that on a funded account? Yeah, I would totally do it on a funded account too, HF. At least with micros, because the amount that I was risking on a particular day would still be within the parameters of those. So, and you look at the last month, it would have passed. No, it wouldn't have passed. The target is 3,000 now. Close. But size up a little bit. Always be trading 2, and I would have passed. Okay. See you guys tomorrow. Stay profitable.